Hey guys, this is Claudia here from the Bookkeeping Experts. We're back for one more week of education with QuickBooks Online. Approaching the end of the year, and right now you should be thinking about getting those books done and ready for the end of the year. Today we're going to talk about a very important subject. All subjects are important, but we're going to continue on what we started last week, which is categorization. But we're going to talk about income transactions categorization. So how do we categorize? When do we match and when do we add those transactions, and how to avoid duplication? So all about income transactions and the workflow of income transactions in QuickBooks Online. Without much further ado, here we go. All right, so here is our simple company. And the first thing we want to do is on the left hand side menu, click on transactions and then bank transactions. Okay, this is where we categorize transactions. Remember that once you link your bank accounts, you still need to categorize those transactions in order to enter into QuickBooks Online. So remember that you do not exclude the transaction unless it's a duplicate. And remember last week how we treated the transfers from one account to another. So when you have a transfer from one account, you record the transfer and match on the other side. And today it's going to be income transaction, just income transactions. First of all, the workflow for income transactions in QuickBooks starts with the invoice. So the first thing you want to do, you're going to click on the plus new, you're going to create an invoice and send it to your client, right? So any client here, and let's say it's design, we're going to say 3 hours. And what we're going to do in this invoice is that we're going to have some items that are non-taxable and some items that are taxable. The non-taxable is the service. The taxable is the products. Let's say that I need 2 pumps here. So for the products that we're selling, they are taxable, but not the service. So you'll see that it's calculating California, not in California, but California is 8% sales tax. So it's creating that $2.40 here. And we're going to go ahead and save and send to the client, right? But here we're just going to save it. And I send to the client. This is just a sample, so that's why we don't send. And then once the client receives the invoice and make the payment, we're going to go ahead and click on receive payment. And I'm going to send it to undeposited funds. And the reason why I send to undeposited funds is because undeposited funds, it's a asset account that holds the payment until you create a deposit and match it in banking. So it's just a holding account. At the end of the day, undeposited funds should be a zero balance. A lot of clients actually make a couple of mistakes. One is that they create the invoice and then when they receive the payment, they never record the payment on the invoice. If you have QuickBooks Online payments and your client pays through QuickBooks Online, QuickBooks is going to automatically generate a payment to undeposited funds and a deposit to match it in banking. So all of this without you doing anything. But if you're receiving check, transfers, or anything like that, or e-payment, whatever you are receiving that is not QuickBooks payments, you will need to record the payment in QuickBooks. And then remember that the amount of the payment will have to match whatever happened in the bank. So if the client maybe pay a little extra for whatever else, they added some extra service or whatever it is, you need to update that invoice before you receive the payment, because that has to match whatever you receive from that client. Okay. All right, so we're gonna go ahead and save and close. Oh, I can do save and new. And then I'm gonna record the payment on that other invoice as well, right? Oh. So there's another invoice pending here, and I'm gonna record. Oh, there's not. Okay, there's not. So let's see, sales invoice. Yeah, there's several invoices on this sample company. So I'm just gonna go ahead and record another one. I'm gonna do Amy's as well. I'm gonna put the payment for today, undeposited funds, and let's suppose that she paid multiple invoices. So the one that we did, and this one as well. So we're gonna save and close here, right? And I'm gonna duplicate this page. If you want to bring your mouse to the top and right click it and duplicate this page, we can have the page with the invoices, and the next page I can go into bank transaction. I can go back and forth because I'm trying to match whatever they have here. But a lot of stuff that is in here, this is a sample company that already has a match. So we're just gonna have to create something that is already there. Maybe the school cards. No, we're just gonna create the payment, and then you'll see how the matching goes. Okay, so we created the payment, and it goes to undeposited funds. To be able to see undeposited funds, you're gonna click on the plus new and bank deposit, and undeposited funds will be sitting over there waiting for you to record this deposit so you can match it in banking. Now, this is a sample account, but we're just imagining that Amy's Bird Sanctuary sent me 2 payments on the 7th of December, which is today, for $496.40. Okay, and I don't have a payment in the bank for that amount, but let's suppose that I do, and this is the exact amount that hit the bank. Now, if there was like bank fees or anything like that, before you record this deposit, you will need to record the deductions as well. So when you record the deposit, there's a couple of things you need to pay attention to. And one is the bank account that the deposit is going to. So here is going to checking, and the date that this deposit is being recorded. Now keep in mind that if the deposit hit the bank on the 7th or the 8th of December is okay, but if the deposit hit the bank on the 6th, that means you received the payment before. You need to correct this payment to whatever date you actually received the payment, and correct the deposit date to whatever date you actually deposited the money or clear the bank, either one. But it has to be, this has to be before it actually hit the bank or the day off. If you do it for a post date, then it's going to create an error, which is called unapplied cash payment in QuickBooks Online. You might have seen that on your profit and loss, and we have a video on how to fix that, but just pay attention to that. You never have that problem. Okay, so if there was deductions, okay, let's suppose there were deductions. Okay, let me go to banking here. I'm trying to find a deposit. So this $200 here, if she was to pay only one, so let's say that she only paid the $239, but there was like some products that was not available, you would select here, you would either fix it on the invoice. You're going to select here that is reversing that sale, or if you had some kind of bank fees, you go ahead and write down the bank fees right here. So let's suppose that bank of, I don't know, Bank of Best, whatever. I don't want to be choosing any bank here. So, all right. Don't have, okay. And here, if it is a bank fee, I'm going to go ahead and put it as bank fees. And the amount here is going to be a negative amount. So it's going to be a minus. And then if I have $200 deposit, that fee was $39. So my deposit here is $200, which actually matches whatever happened in banking. So, and the deposit happened on the 7th, and here on the checking account. So we're good with the date, we're good with the account, and we're good with the amount, and the deduction. the deduction right over here. So $200, and I'm gonna save a new, and I'm gonna have a match here. So I'm gonna refresh the page. When I'm working with two pages, and I record a deposit on the other tab, you're gonna have to refresh your page. One way for me to refresh it is to click on Categorize and then back to for review, and voila, look, I have a match, and I can go ahead and click on it, and I know exactly it's correct. Okay, now if I have like maybe multiple payments, let's just come up with those. Okay, this is like, let's suppose that I'm going to take a look at some deposit. I'm gonna undo this deposit over here just so that I can show you. Okay, so this is multiple deposits, okay, and that's what I wanted to show you, and how to match them. So pay attention on what it is. One way for you to make your life easier is when you record the deposit on the memo here, you can write down a few things about this deposit, and the reference number, maybe the check number that you receive from your client. You can put something on the memo and the reference number that is going to help you know that this deposit is the right one. And I'm going to write here 12 reference number 12, so that I know that this deposit belongs together. 1 2 2 and 1 2. It could be like check 1 2 whatever. Let's suppose that all of this. So I am going to I'm going to save a new here, and the reason why I want to do that is because I want to undo this deposit, but I want to make sure. Okay, so 220. Let me write it down here. We're gonna write down all these details because we're gonna have several deposits. So we have the 220, we have the 460 with 40, we have 226.75, we have the $80 and the 81. So I'm gonna delete this deposit. When I delete the deposit, it's gonna go back to undeposited funds. And I'm doing that so that I can show you how it works when I have multiple payments for one deposit. So click on plus new, and when I go to bank deposit, all those payments are here now. See that? Yeah, because I deleted that, and I deleted the deposit, so it goes to payments. So now I'm going to record the deposit that was recorded before. So I'm going to select the transaction. So I have 220, I have 460 right here, I have 226, there it is, and I have $80 and $80, and I have 81 cents. Oh, is that it? No, maybe. Okay, let's take a look here. Maybe not. So let me see. Categorize. Did I write down too many? I wrote too many. So it's $868. So I think that $200 is not part of it. 868. 220. Okay. Okay, so maybe this one, because it was recorded here, maybe this one had some kind of discount. Let's see. 226. Okay, let's suppose that is 907 here, and I'm gonna put the deductions here so that I can get to the number. Okay, so let's say that I have Bank of the Best, and here I'm gonna put as bank fees. And remember, I have 907 here, but the bank was 868. So let's figure out what those fees are. I'm gonna pull up my calculator here. So we're gonna do 868.50. 907. 907. 15. So the deduction is $39. Okay, so we're gonna select the bank charges, and I'm gonna do a minus $39, so I can get to the amount of whatever hit the bank, because that's what happened. Okay, in this case, remember, this is all simple. This is nothing real. One thing that is also important is to make sure that you don't select transactions past the date of the deposit, and that the deposit date is whatever date is in here, which is in this case November 11th. So I can do it for November 11th, not December 7th, because that's the last transaction that we did. So this one is November 11th. So I have everything here. The deposit is exactly $868.15. The date, the checking account is right. So I'm gonna go ahead and save and close. It's gonna bring me back here, and we automatically have now this new match, and I can go ahead and match it. Okay. So very important, if you do have an invoice, to make sure you record the payment on the invoice, and then you record the deposit for the exact amount that hit the bank. Okay, and that workflow will help you a lot. Some people say, why do I have to do all this instead of just recording it straight to the bank account? There's a couple of reasons for that. One is that if there is anything on undeposited funds that was not matched at the end of the day, so you recorded the payment because you want to record the payment once you receive the payment, but you haven't deposited yet. So if there's anything left, you want to make sure you look at those and verify. So what happened to these payments? Did it get deposited? If it's so, how come it wasn't matched? And there are situations where you can find that the money was never deposited. That's an accounting problem. It means that maybe somebody didn't deposit it or deposit on their own account. Whatever it is, you want to make sure that this money is accounted for. Very important. So that's why we have this workflow. One, to make sure you record the payment when you receive it, and then record the deposit when it actually happened. Okay, so once you get it all done here, so you record the deposit, you want to make sure it matches exactly what's in banking. And then when you match it in banking, so you're matching, like we just matched that deposit, you want to always match to a deposit, never to an invoice, never to a payment. Because when you do that, when you just match to a payment, you record straight to the bank account and payment, and you click on Categorize, here it's going to say added instead of matched. Okay, I'm just going to show it to you. Okay, let's see, there's one payment here. So if you click on match the payment, November 9th, it's matched to a payment and not to a deposit. So and that payment could be incorrect. So you never know. You want to make sure it says matched to a deposit. Now look what happens when you just add a transaction, an income transaction, without matching to an invoice. So I'm just gonna put here sales, and I'm gonna add. If you go to Categorize, because when we add, you categorized already, and now you're adding to your QuickBooks account, and now it's added on your profit and loss and so on and so forth. Here on the back is gonna say added, and there's nothing that has been matched to this income transaction. It could be okay, because this could be maybe a refund from a transaction, and if that's the case, then that's fine. That's fine. And the other way is that if you don't have any invoice or sales receipt for this transaction, and there is no sales tax, it's just a clear income service, maybe the customer is sending to you, and there is no sales tax, nothing, this is the clear, then you could just categorize right from the banking and put the name of the vendor and categorize for what it is. You can put sales or service. there you go, service. So usually service is non-taxable, so you don't have an invoice. Yeah, so make sure you put the customer here and then you can add that. Okay, so that's how you categorize income transactions that does not have an invoice or sales receipt to match. You know, when you go to categorize, it's going to be added instead of matched. But any kind of income transaction that has an invoice or undeposited or a payment, you want to make sure that you match them instead of just adding. Because if you just add the income transaction, even though there was a payment sitting on undeposited funds, you're going to have two problems. You're duplicating that income, because when you record the payment into the invoice, into undeposited funds, you're recording a payment to your business, or income to your business, and then if you categorize as income again on the banking, then you're duplicating your income. Okay, so that's a no. You want to make sure you don't do that, because if you do that, you're going to obviously increase your tax liability and you're not going to have correct numbers. So very, very, very important to make sure you categorize it correctly. When there is an invoice, you must match. You must record the payment and match it in banking. Okay, another problem, when people record straight to the bank instead of undeposited funds, sometimes the amount is a little off. Okay, and it's not gonna match it in banking. So that's why sometimes you don't match, is because maybe it's off by 1 cent, or maybe the date is incorrect, or maybe it was recorded to a wrong account. So once again, you are going to duplicate your income. And the worst of all is that you're going to mess up the amount on the checking account as well. So not only are you messing up your income, but you're also messing up the balance on your checking account. And it will never reconcile, right? Because you're going to have a bunch of transactions that actually are all duplicated. And you can catch that when you categorize, when you reconcile, but a lot of people will never reconcile, will never know, and will pay double taxes. So careful with that. Another thing for you to categorize in banking for income, it's refund. So how do you categorize a refund, which is an income on the account? Well, you're going to categorize it exactly how you categorize your expense account. So let's say you're a construction company and you had some supplies from Home Depot, right? But you ended up using half of those supplies, and then you come back and you get a refund for the remaining balance. So how are you gonna categorize that refund? So let's find an example here. Okay, and like I said, all of these transactions here are on our simple account. So I can go to the Categorize and undo that $55. Okay, let's suppose that this is actually a refund, right? So Books by Betsy, and let's suppose that Books by Betsy was categorized as supplies, job supplies, as expense, supplies, or maybe office supplies or something like that. So even though this is income, it's a refund for that expense. So I am going to categorize it the exact same way as I categorize the expense account. So this is going to offset that expense, and that's what it's meant to do, to offset the expense. So if you spend $200 on Home Depot, you return $100, and then they refund it back to your debit card, you're going to record that transaction as a supplies, just the way it was recorded for the expense, and then your end balance on that supply expense is going to be $100 instead of $200, because you return $100. Okay, so this is it for income transactions. Let's go back here. All right. Okay. All right, I'm back. Okay, so this is it for categorization of income transactions in banking. So remember, there is the workflow, if you have an invoice, if you don't have an invoice, you can't categorize as income. You want to make sure that you're not duplicating your income. And the workflow is create the invoice, and then you record the payment, send it to undeposited funds, record the deposit, and match it in banking. That's a very important workflow. If you are routing, if there is only one check, one payment, you're routing straight to your bank account, must be extremely careful not to duplicate that income, because you want to make sure that the amount is the exact amount that hit the bank and that you do match. Because if you don't match, either way, if you're sending to undeposited funds or directly to the bank, you want to make sure you match it. If not, you're duplicating income and your numbers are not right. So you're overstating your income. You can be overstating your expense if you're not matching expense, but today's just income. So you may be overstating your income. You may be paying too much sales tax and so on and so forth. So you want to make sure you be careful with that. All right, so hopefully this was useful to you. If you find this video useful, we come back every week. So first of all, subscribe to our channel and then share with your friends, with your coworkers, with everybody you know. We want to help as many people as possible. I've been doing this for a long time, and a lot of the subject that I cover, you're not going to find anyplace else, because this is not just theory. This is hands-on work, learning exactly how to fix problems when you are working. So if you like this, please share with your coworkers. And if you need any extra help, we do have some extra help that you can hire us for a one-on-one to take a look at your book. So feel free to contact us. Our contact is down below. But do subscribe. If you have a question, write down below. We're gonna get to that question right away and answer them as they come. Thank you for watching and spending this time with me. I hope to see you next week. And until next time, keep on smiling.